Thank you, Mr. Chairman, and thank you, Ms. Cross, for being here today. I want to step off on an issue that was raised by my partner to the left, China, and the discussion of fraud that enters our marketplace. As we get into increasing globalization and more people come to raise capital in the United States but have significant assets and operations overseas, what kind of protections do we have in place to assure that if there is a remedy that needs to be reached, that we can get at assets or individuals or otherwise that are operating in these foreign countries?
That's a very good question, Congressman. We don't have the same remedies that we do here, and the way the securities laws are structured, we deal with that through disclosure. We let companies warn investors that they won't have the same remedies if there's a problem with the company. The SEC doesn't have a merit regulation screen. We don't have authority to tell companies you can't raise money here if you provide sufficient disclosure. What we've tried to do, though, to provide as much investor protection as we can in light of these concerns is, for example, Chairman Shapiro met yesterday with the head of the Chinese Securities Regulatory Commission to discuss better ways for us to share information to get at our concerns about, are these companies for real? Who are their promoters? And we have a new initiative to get a better sense of how are the audits being done. You do have to have an audit, and so are we appropriately regulating those auditors? Are they going over and looking at these companies, or are they doing it remotely with people on contract? That would be a concern. These are all issues that we recognize are very important that we get at, and so we're doing the best we can.
Well, that's right. I mean, it's not just those auditors. It's also the ability for sort of the independent analysts that come. There's already a shortage of the kind of analysis that we'd like to be seen on the market now. I think there's been a shrinking of the banking institutions and otherwise commitment to do an analysis. Are we getting the kind of cooperation to allow analysts to travel to the foreign countries and be given complete access to the information that companies here would be given to analysts?
That's a fair question. I don't know the answer to that. I think we'd be happy to check and get back to you for the record.
Okay. Let me switch my questioning just on the issue of the cap of the 500. One of the concerns that I have is in this environment we're seeing a great deal of frustration on the part of entrepreneurs who are trying to raise capital in difficult times. Obviously, one of the things they're looking for is access to the markets. One of the things that inspires people to continue to work in sort of startup companies is the idea that they can take and gain some equity stake by being given shares in the company. Are we doing anything, or can you talk a little bit about what kind of incentives we can give to carve out the counting of that 500 for individuals who are sweat equity holders in these startup companies?
That's an excellent point, and I appreciate that is a key way that they can incentivize employees to come work for them and work hard. We've done a few things. First off, the options that are granted to employees don't count against the 500. So we adopted a rule in 2007 that says you don't have to count the options. The staff in my division has provided relief also to companies that they don't have to count restricted stock units that are provided to employees. So far, you still have to count stock. So if they're stockholders like anyone else. Our review that we're getting ready to undertake of Section 12G's 500 limit will consider the question of should employees be counted the same way. There are concerns. There are certainly frauds that happen where employees are the ones who they lose both their job and their investment. So you do want to watch out. You don't want employees to lose everything when there's a fraud at the company they work for. So we need to balance those.
Yeah, my concern as well is the inability or the ability that it has to crowd out the ability for it sort of limits the pool of people as well, the 500 that allows us to raise money. If in fact you are including those kinds of shareholders in your number, then it makes a smaller pool that effectively you can raise your dollars from, which presumably then sort of has, would you agree that that has a chilling effect then on the ability? Because I would think that it would cause the cost of that capital to increase for a small business trying to attract investors.
We have heard that the 500 cap is an impediment to capital raising. And the question we need to look at is 500 the right number, and are we counting correctly? Because there's a lot of companies that are actually private companies that trade in the OTC market that have thousands of holders, but they're held in street name, and so they only count by broker. And so we need to look at how are we counting, and is the number the right number, and are the right people included in the count? So there's a whole lot of good, hard questions we need to know the answers to.
Thank you, Ms.